Good morning. My name's Ryan Littlestone from forexflow.live. I'm going to speak today about dollar yen, mainly yen as well, because what we've got this week, a very big week for Japan and for potential flows into the yen. We've got month end coming up at the end of this week. It's also quarter end for most markets, but it's also financial year end for Japan. And that can tend to have an effect on markets. It can pull currencies around, as I say, especially the yen, because what we can see is repatriation into the yen from other currencies as financial firms bring their profits back home for the end of the financial year. And what it can do, it can sort of upset the balance and create false moves, if you like, that are out of sync with the ongoing fundamentals at the moment. So that's one thing we need to look at for the yen side of the trade. And obviously one of the big pairs for that is the dollar yen. Now, this has been quite volatile of late, obviously, because of the Fed's moves. They're entering a more or reaffirming their neutral stance by pretty much removing hikes or the possibility of hikes for the rest of this year. Now, that was something that the market was leaning towards anyway. It had been questioning whether the Fed could hike this year, and it pretty much got confirmation that they're not going to hike at all for the rest of the year. And that sent the market into a little bit of a tizzy, because now the market's now thinking about recession. There's a lot of eyes on the yield curve, and we saw it invert for about 2 minutes last week. A lot of market analysts, jumping all over that, and when's the next recession coming, and will they be forced to cut? And from that, we've seen rate expectations absolutely crumble, and they've shifted from mainly staying unchanged this year to even starting to price in cuts this year. Now, we think here at ForexFlow that those expectations are going a little bit too far to the other side of the boat. And because the US economy isn't doing too badly, yeah, it may have periods of softness, much like the rest of the major global economies we're seeing at the moment. Obviously, the risks of the China trade situation, Brexit, those sort of things. But it's gone a little bit too far, we believe. So we've seen this reaction, and dollar yen broke under 110 last week. It didn't confirm the break. We've been back up above and then back below again, late into the week. And from Asia, we've crept back up. The bounce has been pretty weak so far. We've got a base around 109.75, and we're finding a top into the 110, 20, 25, 30 area. So from a technical perspective, we've seen the drop back from 111. While we hold above 110, then that keeps the buyers afloat, if you like. If we come back under 110 and hold below 110, we're going to see a push down, maybe even towards the big 108 level, which is one of the edges of the wider range I'm looking between 108 and 110, as I've spoken about before. So that's what to look at the price at the moment, as I say, going into this month end and fiscal year end for Japan. We'll keep an eye on the models and what they say at the moment. Early indications, some models pointing to modest USD selling against the majors, especially yen as well. So we'll have to throw that into the mix into whether we see the yen get bought on this repatriation effect. Now, another thing I just want to touch on quickly is another potential big event looming for Japan, and something my colleague Combe brought up on the site. And that's in potentially from the 27th of April. We've got a 10-day period where we might not get a lot coming out of Japan, where the financial institutions are going to be closed or at least temporarily staffed because of the abdication of the Japanese emperor. There's a lot of unknowns in this situation, but we're not getting a lot of information that banks know what they're going to do. So this is just a quick heads up, and we can touch on that a bit later and over the next couple of weeks. It's a period, as I say, where the banks are potentially going to be closed, people forced on holidays. It may affect the economic data. So it's going to be a big risk event for Japan, but we'll cross that bridge when we come to it. And as I say, I just wanted to highlight that for the future. So that's a view of dollar yen. We'll keep watching the prices and see what the best trading opportunities are.